Okay, so today we're going to be doing the Tuesday recap. Considering I didn't put the weekend analysis as a video, obviously I did put it in the Telegram and I did do the weekend analysis. This may go on YouTube if I have the time to upload it. So if you're not in the Telegram, there is a link in the description if this does go up as a YouTube video. But without further of any waffle, let's get into the Tuesday breakdown. So as I was saying on the weekend, if we do get a break of the 150.5 area, then we should see some upwards momentum. And if it does retest, then it will be perfect to take a buy. Now as you can see, that clearly happened. We did get a break and then we did also get a retest and then a move up. However, I didn't like it because of this wick over here. If we go on to the 1 hour time frame, you can see that we're having reversal candles literally in the same area as the wick on the 4 hour. Plus, didn't really like these candle formations with the bearish engulfing. So overall I didn't take it, but if you did take it, would have made perfect sense. And if we use a small Fibonacci real quick, we can clearly see that it lined up perfectly with the 786 and closed above or around the 618 area, which is very, very good. And you could have possibly got a lower time frame trade of this, wherever that would have been, but nevertheless we're currently on the 4 hour coming down. Really I want to see this area held. It may not come down to this area, although so if we do get another Fibonacci, we can clearly see that the 0.5 area right now is holding, and I think the reason for this is because of this structure here. And I think if we go down to these lows, we're sort of in the area of, this is our lower time frame higher low, to be fair. So if it does hold, which it looks like it's holding right now, then we can still see upwards momentum up towards the 151 areas. Clearly if I just bring this Fibonacci back, it links up with the 151.77, which is a resistance support area, so we could go up to there. Personally, in my opinion, all JPY pairs XXXJPY are overbought and they're very, very overextended, so I would be very wary on any long-term buys. And to be fair, I think the only actual proposition would be a short-term buy for now. Obviously the sentiment hasn't changed. I did say on the Telegram this morning that the sentiment hasn't changed, the fundamentals haven't changed, so we should still see bullish sentiment, overall upwards direction. But I think, you know, we have been overextended for quite a long time. This consolidation here may have helped build up the amount of orders we need to take it long, but I do think we are a bit overextended, so just be wary about that. Anyway, moving on to GBPAUD, it does look a bit messy, but it's pretty easy to understand. On the market open on the weekend, I did say this pink box, if it's held, this could be a high-low structure and we could see pushes to the green box. I did have this area here marked out, firstly, as you know, if we didn't break this level on the market open, then it's sort of seen as a double top in price, don't want to go further, so it's sort of a resistance area. But also on the other side of that, is it could be a support. Currently it's broken through that, so it's pretty invalid right now, but again, it did work. If you did get the market open move, that would have been like 200 pips on market open, pretty easy. And again, I said I wouldn't be trading GA because it's, first of all, it's way too messy. It's it's not very clear, although this lower time frame structure is very clear. I would like to see a break above 1.811 before taking any sort of buys, and we need to clear the lower structure in order to take any sells. But the sentiment hasn't changed. GBP is still doing well with vaccines, and overall the economy is moving forward. There's not many drawbacks for the GBP. Same with the Australian dollar, with the vaccine optimism, and again, sentiment hasn't changed, fundamentals haven't changed, so I shouldn't really having to be repeating myself. Again, I did mention on the Telegram this morning that the market is fighting with two opposites right now. So we have the yields pushing up, the US yields pushing up, as well as the vaccine optimism and stimulus approval / boosts. So those two are very, very opposites. Currently, when yields are up, we will see less driving in risk currencies, so the likes of Australian dollar, New Zealand dollar, etc. We will see more strength in the USD. Currently, today, the yields are lower. So if we look at US 10Y, this is the overall or the main focus for yields in the US. And as you can see, we broke this structure here, but since then, this daily candle, we're having a bearish engulfing, so yields are down today, which is good for risk on currencies such as the like of Australian dollar and New Zealand dollar, as said before. But overall, this pair is two strong currencies against each other, so it's going to be messy until one of them becomes not as strong as the other, which hasn't been announced yet, but could be announced soon. I think we have a RBA speech on Thursday, so we can see what happens then. GBPNZD is literally the same thing as GA. I have the same sort of setup. As you can see, market open. The market opened here. No, here in fact. So literally the same exact thing. Pink box held, and we pushed up to the green box. This would more of a smaller move. You would have got around 100 pips. But nevertheless, same thing. It worked. If you got it, well done. It wasn't that hard of a trade, but it was very easy, and you don't complain about easy trades really. Moving on to EURJPY. One of my students actually took a buy from the bottom of this consolidation zone, and he rode it upwards. Unfortunately, one of his re-entries got stopped out, so that would have been, that would have been another good entry, but price didn't respect some levels that we had marked out. But other than that, I think we are pushing upwards. I had this bearish sort of channel. Even if you bring it to the bottom, it sort of makes a channel, which gave me the confidence that we are going to move upwards, because we broke this structure. We came back to retest it on the 4 hour, even the 1 hour, my bad, and we had a bullish engulfing from around the trendline area. This is a very messy trendline. It's not accurate at all, but you can't really get too accurate with how the market has been moving. So around this area would have been, a prime entry for anything, but my student entered down at the bottom over here with a strategy we mentioned last week. I'm not going to go into details about that. Currently though, it is respecting this resistance area. However, I do feel as if we can push up, and the reason for that, if I delete this arrow real quick, we have this resistance area, but currently price has closed above the previous bodies. The last 4 hours did come down, but as you can see from the close, we are rejecting all of that area. Currently we haven't pushed too high, but we still have 3 hours left, and we have broken the top wicks for the last 2 4-hour candles, which is a good sign. Again, on the 1 hour we do have a large wick to the top, but again we have 3 hours for the next 4-hour candle to finish. Really, I want to see this candle pushing up to highs, and then after that it's sort of targeting this area. If we do pull back, that would be a good entry location, because we're still bullish EURJPY. Anything against JPY we are buying the dip, but that is pretty it with EURJPY. It's pretty easy. Again, the fundamentals and sentiment hasn't changed. So with EURAUD, currently we're in a big consolidation zone, but again the fundamentals haven't changed. The euro is still weak compared to how strong the Australian dollar is. However, the yields, again what I just mentioned, is prolonging this, and it's why it's in a consolidation right now, because the euro is weak or neutral weak, and the Australian dollar is strong, as long as the yields don't sort of interrupt that, because as soon as the yields start pushing higher again, the Australian dollar is going to get weak because the US dollar is getting strength. That should make sense. But again, I had the same sort of idea of we're going down to lows again. If we stop here, perfectly makes sense. Again, we have this area that we need to look out for, because it is the low. If we do break this low, then a retest would be a lovely entry point, and we can sell off again. But first of all, the target is to break these consolidation lows, as well as these lows here, before we think about anything down here. The Euro New Zealand dollar is the same sort of idea as Australian dollar, Euro Australian dollar. However, we are quite higher on the EN compared to EA, with the consolidation zone in this sort of, not channel, it's more of a slowly closed in wedge, or just really it's in between two trend lines. And I have the same idea. We are currently respecting these lows. Again, on my Instagram yesterday, I posted that one of my students got in from up above here. Very nice entry, and again, I think as long as we can break this, and then we can also break this, we should be fine. We can continue lower, but again, it's just the yields stopping that. Currently yields are down today, which is why market is moving a little bit more fluidly, showing a little bit more direction, especially on the lower time frames, with the lower highs, lower lows being made. But overall, we still need to break these lows, and I think this is when you have to just sit on your hands, don't take any trades, and just wait for market to do its thing. And then once we see stuff with market breaks and retests, then we start getting into the trades. Moving on to Australian dollar, I don't think I posted Australian dollar, but again, or Australian dollar JPY, but again, it's the same idea. The sentiment again hasn't changed. We're still long Australian dollar, we're still short JPY, but currently it's in a consolidation zone, so we just wait. Again, we just wait. Don't think I really need to touch upon this. It's the same idea, and I don't want to get too repetitive, even though I have already. So let's move on to gold. Now gold, again, I said if we retest this box come this week, we should go lower. If you see, we did come up to retest it, but we did sell off before that. If we jump to the 1 hour, we sort of have the reason why. So we have this area right here. As you can see, price tried to come up, but it just couldn't, and it just sold off instead. If we use the Fibonacci, it does make sense also, as it is sort of rejecting the 618 area. It closed above for one candle, but instantly closed back down. So it just shows that it was respecting the 618, it was respecting this support here, and we moved lower for around 300 pips, around that. So I think the sentiment still hasn't changed. We're still short on gold, but we may see some retracement. This is a nice retracement here. Again, we just have to wait and see if we can push lower. We do have this respected sort of lower trend line here, and it's been respected quite well. If we do break that, then we may be oversold a bit. So I wouldn't be surprised if we had a day or maybe even more of just either consolidation or a more of a pullback. But currently I would still have either one of these three as the major highs, that if it is broken, especially if this level breaks, then we're definitely sort of questioning if the sentiment has changed for gold specifically. But that is it for the market breakdown. That is all the pairs that I gone over on the weekend through the Telegram. Again, if you're not on the Telegram, then link is in the description. I suggest you join, because any questions and any updates that I don't provide on YouTube videos, as they're too small of a topic to cover, then I will cover on there. But anyway, if you did find this helpful and you did learn something, then please press that like button. If you haven't already, subscribe. But thank you for watching, and I will see you in the next one.